Hello, everybody. I'm Peter Grant with Zaner Metals in Denver, and this is This Week in Metals. My colleague,
And
Peter
and
Thomas.
I was going to welcome everyone to Happy Father's Day,
Oh,
and it has been a good one. How about you, Pete?
yeah, it was really nice camping with the kids this weekend while my wife was away in Chicago. So just
Ah,
got back, got showered. Still a little discombobulated, though. But
gotcha,
yeah, it was
man.
really nice. Thank you.
Well, I'll tell you what. Swiss sales in gold have been all over the news while you were gone, and Bloomberg was all over it as usual, and they reported a high of 126 tons coming in, which is year on year 7.6% over. So that is just a gigantic number for Switzerland. And the ETFs have had a positive cash flow 6 trading days in a row. We had a break there, if you recall,
Right.
and they have come back gangbusters. People are coming into them just in big numbers. And our good friend Andrew Higgins, by the way, who is keeps us informed with some really, really good stuff, broke an article for us on EU car sales and sent it over to me. EU car sales, the projection was nowhere near what we got, 57% below expectations. Just a monstrous break. And that was from the EU Automobile Manufacturing Association. So we feel pretty confident in it. And Mr. Higgins is a great source. So I'm comfortable with sharing that with you. That number is really enormous. It's going to bury a whole lot of production. The only good thing that we have seen is that stockpiles are down across the board. So as far as ore goes, we're seeing in pretty much everything. We're seeing low amounts of ore everywhere, which has been really holding up your friend silver, holding up gold, and also I'll tell you something else, Pete. We've been seeing a lot of metal on Zaner Precious Metal site rolling out. Lots of eagles,
Right.
and demand has been really, really good. So I think that physical on the bullion side, on the retail side, has been very, very good. And then my friend Jessup over at Reuters came out with a really interesting piece at length late Friday while you were gone, in which he said that the world's wealthiest advisors, in other words, advisors that recommend to the largest investors in the world, and also there is a group of 9 banks that control all in $6 trillion, if you can believe that number. And this is right out of Reuters. They control, yeah, the number is, I'm reconfirming it, it's 6 trillion. And that in and of itself is interesting. But for the first time, these advisors have come out and said that they're actively pursuing buying gold as a backstop for all of their investors and the private banks that they advise. So we have gotten a
Physical, or are they
physical.
recommending
No,
ETFs?
not ETFs. They're talking about backstopping with physical bullion bar. And I think that that's going to present some very interesting issues for 100-ounce bars going out, because we have not been able to find any. And I got a feeling if this is even close to accurate, and Reuters is pretty good. Jessup, I've read his stuff for quite a while. I think that we're going to see some pretty good demand. And all of this was like breaking late Friday.
Yeah. Wow. I missed a
Yeah.
lot.
Yeah. I mean, there was a lot going on. And I was thinking, that we were going to see a strong opening. And I believe that right now in Hong Kong, we're seeing the market going bid here, and we're looking at some
Yeah.
pretty good numbers.
Yeah, yeah, it looks like it's going higher. So let's recap last week just real quick, because the metals were largely consolidated.
Yes,
Gold and silver were up modestly, less than 1%. Platinum was up a little bit over 1%. Palladium and copper were down fractionally. Um, but it would be nice to see the metals break out of these recent ranges for sure. And I think
yeah,
what you were saying about the physical demand sort of bodes well for that. I think that there still is a fair amount of safe haven interest. You know, as we're
yes.
seeing these spikes in new cases of COVID and so forth, people are thinking we're not necessarily out of the woods just yet, and that would also suggest some vulnerability to the stock market. So having some hedge on would probably be a pretty prudent play.
I think you hit it on the head. I think the COVID came in. I think we're also seeing the people's People's Republic has come out in China and said that they're going to push, and they are not backing down from their new stance on the laws as far as absorbing Hong Kong a little more. So that's going to put a very large demand, because 80% of the gold deals going through China happen in Hong Kong. And
Right.
if they start squeezing them, it's going to get real interesting, because everybody's going to start throwing their paper away and buying gold. So we could see, as we're seeing right now, this market looks like it's attempting to push through this range, as you were saying, range bound. And I got a feeling that if mainland China keeps pushing on Hong Kong, we could see a nice little pop here.
Right, right. So last week also there was some Fed speak from Chairman Powell. He
Right.
seems to remain fairly pessimistic, but the big number last week was retail sales, which came out way stronger than expected.
Surprised everybody.
Plus 17.7%. Now they
Right.
were expecting a nice rebound of plus 6%, but
Yep.
you know we were darn near three times that.
Well, the president himself came out, POTUS came out and said, look at these numbers. Obviously, we're doing something right." So he's saying the stimulus is working, and obviously it is.
Yeah, and they're talking additional stimulus as well. So we'll see how that plays out, particularly if this reemergence of COVID cases continues. So this week, I guess probably durable goods is going to be the big number to watch on
Yeah,
Thursday.
yeah.
They're expecting plus 11.5%. So again, a
It's a
pretty
big number.
big
Big
rebound.
number.
But they, these numbers have been beating expectations. You know, you think back to the
Yeah.
jobs number, the retail sales number, things are looking better, and so hopefully, you know, this reemergence doesn't take the edge off the recovery too much. We'll also get a third report for Q1 GDP. Still minus 5% is the expectation for the revision, so it should be in that ballpark. But yeah, it looks like the week's starting off pretty good here with a bid in Asia, and hopefully we get some upside follow through. I'd like to see, you know, silver's really knocking on the door of $18 again,
Yeah,
which
18
is
bucks is the
encouraging.
magic number. And one thing in closing on gold, while you were gone, the World Gold Council released some stats as far as year on year. They released some numbers for 2019, in which they said, and I want to read this because I really don't want to get this number wrong, $146 billion a day in gold was traded every single day last year, which is a staggering number when you consider year on year. That is so far over what we had before. So we got positive confirmation for last year that what's happening last year is happening again this year. It isn't a fluke, and we're seeing a big numbers getting thrown out.
Right. Sounds good. I
Yeah.
do want to your $6 trillion number on the money management side made me think that I also saw a headline this past week that the big three central banks, the Fed,
Yes.
ECB, and the BOJ, have thrown $6 trillion in liquidity into the market since March.
Oh, and Japan. Well, I'm not surprised by Japan.
Actually,
Japan has
actually, I think it was 5 trillion. Check.
okay.
I'll check that. But
All
I'll
right.
pull up the headline and put it in post production here. But think about that. $5,000 billion since March.
A mere bag of shells, my friend.
Who keeps saying that? Good
I mean,
golly.
I mean, the numbers are so big, I can't wrap my mind around them, and I deal with them every
That's why
day.
that's why I said 5,000 billion instead of 5
Yeah.
trillion because it's really hard to grasp.
Oh,
And we're hearing numbers like this with such frequency now that I
yeah.
think people get desensitized to it.
I
But
think that's well put. I think
yeah,
that's well put. I think what happens is you just go, oh, it's only a billion.
trillion
Whoa,
here, a
only.
billion there.
Yeah, right. After a
Oh,
while, it becomes real money, right?
it's raining liquidity, my man.
Oh man. So
Yeah.
what do? You run to the stock market, and it's certainly paid big dividends.
And you run to gold to protect yourself
You better run.
from
You better.
debasement
Every
of the
time you get a
currency.
great big rally in your stock, and you have that excess liquidity, rather than pouring it back into that stock, you might want to consider taking 5 or 10% of that, setting it aside, and buying some gold from
I agree.
Zaner Metals.
I agree.
Yeah.
All right. I think we've got a good week ahead of us, and I'll get back into the swing of things. I
No
promise you.
worries. No worries. Basically, with the car numbers came in, they're going to tell you what demand is going to be as far as copper is going to be. Steel had hit some big numbers, had some big demand. As you know, stockpiles have been down, so a lot of the industrial metals we're seeing good demand. Other than that, I think you're pretty well been filled in, and I think we covered everything for what people should be looking for going into next week.
Sounds great. And with that, we will wish you a great week. I'm Peter Grant with the Zaner Metals in Denver.
Pete Thomas in Chicago, as always. Give us a like and be sure to follow us so we can send this to you as soon as it's done.